contrarian, leave it to contrarian badass Reggie Middleton. He called the housing crash, he called the collapse of Bear Stearns and Lehman Brothers, and the crisis in the Eurozone banking system.
Reggie Middleton.
Greetings, this is Reggie Middleton, and I am here to give a small snapshot of A, what I have been promising for about a month, honestly, but B, what also seems to be in popular demand, and that is a glimpse of the Veritaseum facility, a rental facility. Now, a lot of people are still a little confused about the term rent. Now, I'm a finance guy, and so we were using an economic rent model. Very quickly, economic rent is the capital that is necessary to sell something above and beyond its fundamental value or its labor cost. A quick explanation, or a quick description would be: you have an accounting job. It pays you $100,000 a year. That's what it takes to get your butt out of the bed and go to work. Okay, $100,000. A rival accounting firm that really wants you and wants your knowledge, probably because they're looking to maybe buy out the accounting firm that you're working for, and you have insider knowledge that they may want. So they're willing to pay you $150,000, but market rate is $100,000. The difference between $150,000 and $100,000 is $50,000. $50,000 is the economic rent. Okay, that's the economic rent facility. That difference, 50,000 of the 150,000 minus 100,000, aka the economic rent, can be considered a capital gains style transaction in terms of Veri. So how that would work with Veri is, you have Veri, let's say you have 100,000 Veri. You know, you bought in at the ICO, you're rather large, doing well. And then a real big whale comes in and says, I want to use Veritaseum to build a global digital asset and security exchange. You know, not a couple of 100,000, a couple of $1 million per day in volume, but we're talking, you know, $3 or $4 billion per day. And we want to use the Veritaseum platform, the Veritaseum financial machines and facilities. So they have a problem sourcing the amount of Veritaseum that they need. Let's say they're putting $100 million into the effort. There's a 100-to-1 cost ratio, so they need 1 million Veritas. So you take your 100,000 Veritas and you pledge it to them. Okay, it's not a round number, but let's say you had $1 million and you pledge it to, you rent it to them. Not pledge it to them. You rent it to them from an economic rent perspective using our facility. You expect, right, this to do very well. So let's suppose you run the numbers, you run the analysis, and you think that $100 million will throw off, say, $400 million in P&L. Okay, that $400 million in P&L gives you $500 million all told. So when you get your coins back, you demand the rental return is demand. You don't get your Veritas back, because the Veritas was the key to enter the financial machine. Okay, it was the key, the cost, the gas, the fuel, the entrance, whichever way you want to look at it. But you do get a return. Now, you paid 1% of the deal to get in. Okay, 1 million, 100 million, 1 to 100 ratio. But because Veritas is scarce, okay, you can demand more in return than the actual fundamental cost. Okay, let's say your demand is 3.5%. So if the deal goes as anticipated, or if it goes well enough to fund the 3.5% return, you would actually be putting in 100 million. I'm sorry, you'll be putting in 1 million, but you'll be getting 4.5 million back. Okay, think of it as a capital gains style transaction. That's the economic rent facility, which you can actually see that running in the background as a model that was built. I actually put the kibosh on that. I didn't like it for a variety of reasons I won't go into, but I'm showing it to you since a lot of people just wanted to see what it looked like. Okay, the new version is going to be significantly better in my opinion, and I insist on it being fully distributed. And that's the rule. Always fully distributed to the best of the ability. Best of the ability for capable people means fully distributed. Now, we're also going through either the same interface or the same general portal with a tabbed interface. And we're also going to include contract rent, okay, by popular demand. And contract rent is what most people are used to when they hear the term rent. So, with contract rent, think of it as that you leasing an apartment, you be leasing your Veri. So, someone wants to make use of the Veritas tokens, they don't have enough or they don't have any, you can rent them your tokens or lease them your tokens at a particular rate. They do whatever they need to do with the Veritas tokens. After they're finished, the Veritas tokens are owed back to you, plus the rental rate, a rental fee. This rental fee would be a yield, okay? Think of it as a yield or the equivalent of an interest rate or the equivalent of, say, a zero coupon entity. Sorry, a zero coupon instrument. I'm tired, pardon me. So this would work where, let's say there's $100 million all told, and they need $1 million of Veritas. They only have 750,000 Veritas. You can actually rent 250,000 Veritas to them, okay? Lease the Veritas to them. You have a rental rate, a rental agreement with the, so that fee or that rate will be 250,000 with, say, 10% yield on, okay? So annualized, right? That 200, and let's use straight interest. That $250,000, 250,000 Veri will be 275,000 Veri straight interest. Or you could put an actual static fee on. So you could rent the 250,000 Veri out for, you know, X amount. Now, you have, the other side will have to put collateral up to rent the Veri, because in order to ensure that value gets returned, collateral needs to put up, because suppose they don't return a Veri, either on purpose or because the deal goes bad. In limitations of smart contracts, there are certain things that you simply cannot do to ensure the return of the Veri if you're going to allow them flexibility with the use of the Veri to begin with. Okay, so they rent it for, say, a static 10,000 Veritas. So you put 25,000 Veritas, 250,000 Veritas out, and 260,000 Veritas back with a 10,000 Veritas revenue, profit, yield, etc. If they don't return a Veritas, then they lose a collateral, and the collateral comes back to you. To simplify things right now, the collateral will be Ether, but as you know, we're talking to many entities, exchanges, financial institutions, large funds, strategic funds, etc. And that collateral could be many things, including even fiat, US dollars, etc., depending on who we partner with. Okay? Those are two examples of the rental facility. As I was talking, I have the rental facility going in the foreground, and you could get to see how the deprecated version worked. The new version will be slicker, both from a UI perspective, definitely from a functionality perspective, and fully distributed. Okay, now there are other things to go through since we have you. The Jamaican Stock Exchange deal, which may be the first implementation of this in an institution. It'll probably be free in a while before then. I'm looking for about 30 days for a public beta, but we'll see. Maybe sooner, maybe later. And as I sign off, the Jamaican Stock Exchange Memorandum of Understanding is right here in the background or foreground. I forget how to make this video. You can even have a picture of myself, the chairman of the board, and the managing director that runs the exchange. We're also negotiating with the top 10 global exchange, multi-trillion dollars in activity. Okay, different animal from the Jamaican Stock Exchange, but they're both very, very promising to both us and the industry and holders of Veritas tokens. Many more coming up. There'll be separate videos. Many, many more.